There is growing volatility in the global financial market stemming from contagion risks of emerging economies. However, Seoul seems to be in the eye of that storm, at least for the month of August. Ji-yeon help us look beyond the digits.
South Korea's central bank says the country's financial market shows no signs of capital flight despite contagion risks in emerging markets and a widening key rate gap between South Korea and the U.S. In its monthly data analysis for August, the Bank of Korea on Friday showed that the country's foreign currency exchange market maintained its level from a month earlier, trading at around 1,220 won against the greenback. The BOK also said the fact that foreign investment on local shares are mainly in the form of bonds have played a big part in preventing possible capital flight to the U.S. At present, the U.S. Federal Reserve's key rate is half a percentage point higher than that of South Korea's, but is expected to widen if the Fed decides to raise rates later this month. Korea's 5-year credit default swaps, a form of insurance against default, fell by 3 basis points from a month earlier to 42 in August. The same data show interest rates of government bonds have risen in developed countries because of the economic boom in their economies. Interest rates for 10-year bonds of developed countries like the U.S. and Germany, considered mostly as safe assets, fell due to soaring demand. Meanwhile, interest rates in emerging economies, particularly those facing geopolitical risks, and high inflation rates have soared as their central banks try to prevent further depreciation of their currencies. After the Argentine peso fell, Buenos Aires raised its policy rate by a staggering 60%. Turkey also raised its key rate this year by 10 percentage points to 17.75% to stop the depreciation of the lira. Ji-yeon, Arirang News.